Good morning, everyone. This is Ryan Etner with your Friday, October 12th morning market commentary. We'll start with a little review of the numbers from yesterday. The corn, USDA actually lowered yield by 0.6 bushels. That was obviously quite the change from what trade expected, which was a half bushel increase. So now that we actually have USDA lowering yield, even if it is just slightly, that could end the streak of just assuming every report going forward will slowly increase production. So on that lower yield, what we came away with was 106 million bushel lower carryout than what trade expected. We can continue to expect a little bit of support here with funds recently exiting quite a few of their shorts. We'll have to find support from either continued improved demand or otherwise smaller traders in this market helping to lift the market. So support would be expected to continue, but might be a little bit slow unless the funds intend to start building a long position here. Weekly sales on this morning's report, which was delayed a day due to the Monday holiday, came in at 1010, which is right in the low end of estimates, but still fits inside the range of what trade expected. Flipping over to beans, recap of the report there, USDA raised yield by 0.3 bushel. That was a little bit less than trade expected, where they were looking for a half a bushel increase, so a little bit of supportive news there. And also, many may have missed this, but the USDA actually lowered harvested acres for beans by 600,000. So a slightly less than expected yield increase while also lowering acreage by 600,000 generated a production number that was quite a bit less than trade would have expected. So while we didn't see it directly on yield, you did see a similar report to corn in that total production was lowered much more than expected. This week on the weekly export sales report, unfortunately a little bit disappointing for the beans, coming in at 440 when trade expected a minimum of 800 and a maximum of 1300. So 440 this morning, that'll be seen as a good amount disappointing and might take away some of the buying excitement from overnight. What we can talk about that many will want to see are the 1 to 5 and 6 to 10 day weather maps. On these maps, we are seeing a drastic clearing for almost everywhere where a combine wants to be moving. Obviously, for beans, it'll take a few days for guys to get out there. But looking at the two maps that we have this morning, it is a drastic increase for everyone who wants to see that. So it could take a few days before combines get moving, but the entire 10-day forecast suggests that we will get bean harvest back underway and see much needed drying. Over in the cattle, we'll look at the cash that traded 111. That makes the 5th week in a row of 111 steady cash trade for cattle. So not seeing too much in the way of cash news to offer any influence here. So what we have been seeing is light fund liquidation in the cattle, and that's eased the cattle back down about $1.50 this week. So we will now want to keep a very close eye on the funds. If they are actually going to start liquidating longs, that could continue to grind the cattle a little bit lower, even if we continue to see these steady 111 cash trades. Lastly, let's go back to wheat and talk about yesterday's report, where carryout came in at 956, very close to what trade expected at 950. So no big surprise there in the way of the USDA report. The weekly exports, like we mentioned before, we need to see numbers around 600 on these weekly sales reports to suggest that overseas demand is actually turning back over to the U.S. And this week we got 339, so this will be another week where we will have to say, I guess we'll wait and see if we see that improved demand next week. Trade was looking for at least 400, so it'll be slightly disappointing. But again, even if trade's looking for 400, what wheat needs to see for a bounce on the demand side is a number closer to 600. And in fact, not only 600, we'll need to see a couple weeks in a row of 600 to suggest that larger, longer-term demand is switching over to the U.S. So that's our notes here for this morning. If you have any questions, give us a call at 800-551-4626 or visit us on the web at allendale-inc.com.